Welcome to a new video where we analyze the evolution of the stock market through dynamic charts, making key data easier to understand for those taking their first steps into the world of investing. Today, we will analyze the revenues of Alphabet, Google's parent company, to understand how they have changed over time and what we can learn from its latest quarter performance. The dynamic chart we are about to see has been generated from the image displayed on the screen, allowing us to visualize how Alphabet's revenue growth has evolved and how it compares to its recent history. Google has been a fundamental pillar in the tech sector for decades. Its revenue growth has been primarily driven by digital advertising, its search engine, YouTube, and cloud services. However, like any major company, Alphabet has faced challenges along the way. Over the years, Google's revenues have gone through different phases from early exponential growth to periods of slowdown due to economic factors, competition, and regulations. But the latest earnings report presents some interesting data that is worth analyzing. In the fourth quarter of 2024, Alphabet reported revenues of $96.47 billion. Although this figure represented an 11.8% growth compared to the same period the previous year, it fell short of market expectations by $170 million. On the other hand, adjusted earnings per share, EPS, were $2.15, exceeding the estimated $2.13 and achieving a 31.1% year-over-year growth. How is it possible for earnings to have increased so significantly despite revenues missing expectations? Two key factors explain this phenomenon: an increase in revenue and improved operating margins. In Q4 2023, Alphabet's operating margin was 27%, while in Q4 2024, it increased to 32%. This means the company is generating more profit from each dollar earned. Now, let's take a look at the dynamic chart to see how Alphabet's revenues have evolved over recent quarters. As you can see, the company has experienced steady growth, although with some fluctuations. This type of visual representation helps us better understand growth cycles and periods of slowdown. One of the key moments in Alphabet's recent history was the advertising crisis of 2022, when many companies cut their digital marketing budgets due to economic uncertainty. At that time, Google's revenue growth slowed significantly. However, in recent years, the company has managed to recover and continue increasing its revenues, partly thanks to the growth of YouTube and Google Cloud. An interesting aspect to consider is the impact of artificial intelligence on Alphabet's business model. With the rise of tools like Google Bard and increasing competition in the AI sector, the company is allocating more resources to the research and development of advanced technology. This could become a new revenue stream in the future and a key differentiator against its main rivals, such as Microsoft and OpenAI. Moreover, advertiser behavior has changed over time. Previously, search engine advertising was the primary investment focus, but today YouTube has gained a larger share of Alphabet's revenue. The adoption of short-form video content and monetization strategies has significantly boosted the platform's ad business, creating new growth opportunities. Additionally, we must mention the impact of the macroeconomic environment on Alphabet's results. Inflation, interest rates, and the Federal Reserve's monetary policy can affect consumer and business spending power, directly influencing ad investments. If the market enters a slowdown phase, it could affect Alphabet's revenue growth in the coming quarters. Another relevant aspect is Alphabet's revenue diversification. Although advertising remains its main source of income, the company is exploring new areas such as quantum computing, subscription services, and hardware development. While these initiatives currently represent a smaller portion of total revenues, their growth could reduce Alphabet's long-term reliance on the ad business. Competition in the tech sector is also a determining factor. Companies like Amazon, Meta, and Apple are constantly innovating in key areas such as artificial intelligence, augmented reality, and cloud services. Alphabet needs to stay at the forefront to maintain relevance in an ever-evolving landscape. Finally, investor sentiment is a crucial factor in Alphabet's stock performance. Market perception of the company's future growth and its ability to generate sustainable revenue can influence its valuation. Events such as executive leadership changes, strategic acquisitions, or new regulations can significantly impact its stock price. An additional factor we cannot ignore is the overall evolution of the tech sector. Digital transformation continues to expand across various industries, presenting a constant opportunity for Alphabet and other leading companies. Staying ahead of innovation will be essential for its future success. It is also essential to evaluate the impact of emerging trends on consumer behavior. The rise of e-commerce, shifts in digital content consumption, and the adoption of emerging technologies like virtual reality and the metaverse could influence Alphabet's direction in the coming years. Finally, Alphabet's global expansion strategy is another key consideration. The company has been strengthening its presence in international markets, allowing it to diversify its revenue sources and mitigate risks associated with dependence on the U.S. market. Its growth in regions such as Asia and Latin America will be crucial to its future performance. Beyond the numbers, it is important to understand what factors could influence Alphabet's growth in the future. Digital advertising, still the company's primary revenue source but subject to market shifts and competition from platforms like Meta and TikTok. Google Cloud growth. Alphabet has heavily invested in its cloud division, competing with giants like Amazon Web Services and Microsoft Azure. Regulation and antitrust cases. Google has been at the center of several investigations and lawsuits over anti-competitive practices, which could impact its business model. Operational efficiency. As seen in the latest results, improving operating margins has been key to profit growth. Will Alphabet continue optimizing costs? To further delve into Alphabet's financial landscape, let's analyze some additional key points. One crucial aspect that should not be overlooked is Alphabet's investment strategy in future technologies. While its core business remains advertising, the company has been aggressively investing in artificial intelligence, autonomous vehicles through Waymo, and cloud computing. These investments indicate that Alphabet is not just relying on its current revenue streams but is actively seeking to diversify for the long term. Furthermore, Alphabet's partnership ecosystem plays a vital role in its overall strategy. Through collaborations with universities, research institutions, and other tech firms, Alphabet continues to push the boundaries of innovation. Whether it's in the field of AI, cybersecurity, or sustainable technology, these partnerships enable the company to stay ahead of the curve. Alphabet's latest earnings report provides several key takeaways. Although it missed revenue expectations, it achieved solid profit growth thanks to improved operating margins. This demonstrates that a company's profitability is not solely dependent on revenue growth, but also on cost management efficiency. The evolution of Alphabet's revenues reminds us of the importance of analyzing a company's financial performance over time rather than relying on a single quarter. If you enjoy this type of analysis, I invite you to watch my latest video, where I explain why Palantir could be the next big star in the stock market. Don't miss it. See you in the next video.